students, welcome back to our YouTube channel. I'm Ms. Aruni, covering your business and accounting studies for grade 11. Today we are going to talk about the lesson number 7, Statement of Production Cost. So why do we prepare a production cost statement? Pute, all the businesses that are commodity manufacturing businesses make goods. So they involve a production process where inputs are changed by adding value to create output. Hence, that process incur a cost. So as we use economic resources, which are not unlimited since they're scarce, we have to use them efficiently to reduce wastage. And we have to find out what is the original cost when we make a unit. So the production cost is the cost incurred for the total production within a specific period of time. Next, we plan to discuss the elements of the production cost. So production cost consists of two elements or two cost factors. Those are direct production cost, which includes direct material cost, direct labor cost, and direct other cost, which we could consider as the prime cost, as well as the other cost factor, the indirect production cost, which includes indirect material cost, indirect labor cost, and indirect other cost, which we can consider as the overhead cost. So there are a set of formulas which you have to remember. The first formula is the prime cost, which includes the addition of direct material, direct labor, and direct other cost. Whereas production overhead cost will include the addition of indirect material, indirect labor, and indirect other cost, while total production cost is the addition of both prime cost as well as production overhead cost. So how are we to calculate the per unit cost? So if you take the total production cost and divide it by the number of units produced, you can easily calculate the per unit cost. And what about the per unit profit margin? So if you take the per unit cost and add the per unit profit margin, you can easily calculate it. We are going to do a sum, so these formulas won't be an issue to you. So this is a production cost statement of Ranamira furniture manufacturers. You could see how it is given, right? The prime cost is given and the calculation of the entire prime cost is done. Production overhead cost is given and that is calculated. And finally, the summation of prime cost and the production overhead cost becomes the total production cost. So what is this activity about? Given below is the cost information relating to apparel business Navalier, right? So there's material purchase, salary, wages of supervisors, salary of the watchman, repair of sewing machine, fuel, rent, electricity cost, value of sewing machines. But whenever you are given a question or whenever you get the test paper, since you have 10 minutes, take a ruler and a pencil, start matching each of this cost title with the amount, right? You might think, why should I do that? Since you are stressed and confused, you won't be troubled or you won't miss any of the values if you take time and do it within the 10 minutes given to you, right? Don't go on reading the entire paper. If there are sums given like this, start matching them. And once you start doing the question, that means within those 3 hours or 2 hours given to you, when you start doing it, in front of the particular cost factor, write what this cost is, right? If it is material purchased, you can write here direct material, right? That is DM. Likewise, an acronym which you are easy to understand, you can do so. So when you do like that, you can easily create your own production cost statement. So let's see first what are the requirements. The apparel production for the month of November is 100 units and the company keeps a profit margin of 50% from each unit. All the materials purchased have been fully utilized. The sewing machine are depreciated at 12% annually, so you have to be careful because depreciation is a cost as well. You are required to prepare the production cost statement, right? So you have to make the production cost statement using these values given. Let's go to the calculation, right? So materials purchase 64,000. It goes to the direct material cost 64,000. Salary of the machine operator 20,000. It goes to the direct labor cost, right? You have to write materials, salary of operator, likewise, and then the value. The third one, wages of the supervisor. So is supervisor directly involving in our production process? No, so we can take him as an indirect labor. So indirect labor 23,000 is recorded. Salary of the watchman, he also does not directly take part. So his salary of 12,000 can be taken to the indirect labor here. That is why I have added 23,000 plus 12,000. Right. Next, repair of sewing machine 8,500. So the sewing machine is repaired. Right. So you can take it as direct other because machineries are directly involved in the production. So that 8,500 I have taken under prime cost. Then fuel for the factory 1,500. So if you don't have fuel, maybe you might not be able to do your production. So that also I have taken as direct other. Rent for the building 7,500. So 7,500 I have taken as indirect other. Then electricity cost of 2,500. I have taken that into indirect other. Value of the sewing machine is 500,000. Are we going to take it to the direct material cost or any other of it? Is it a prime cost or a production overhead? No, this is only given for us to calculate the depreciation. So you have to consider this factor. That is, this production cost statement is for November and the depreciation is given annually. That means 12%. So 12% of this 500,000 is 60,000, but it is given for the entire year. You have to divide it by 12 and get the relevant amount for this month of November. So that is 5,000. So this 5,000 is depreciation. Hence, finally, if you add the prime cost, it will be 94,000. Production overhead cost will be 50,000. So the total production cost will be 144,000. As it was already given that 100 units were prepared, you can divide this 144,000 of the total production cost from the number of units prepared to calculate the per unit production cost per day. And also, since it states that a 50% profit margin is kept from the cost value, so you take the per unit cost and for that you keep a 50% profit margin. So then you can calculate the value. So please pause the video, do this calculation and see whether you got the correct answers. So hope you enjoyed learning with us. Thank you.